Welcome to the Investors Trading Academy Economic Calendar of the Week. Each week our news analysts review the upcoming economic events that you should be monitoring. Equity investors will be watching currency markets this week for signs that the recent related trends of a weakening dollar and a strengthening stock market will continue. After a historically bad start to the year, the Dow and S&P 500 both moved into positive territory last week, in part on expectations that a 3-week move down by the dollar could buoy corporate profits and share prices. Many investors had been concerned over the dollar's strength as it can crimp exports, earnings and economic growth. Between September 17 and mid-February, the dollar had risen more than 2% against a basket of major currencies as the US Federal Reserve embarked on a tighter policy while other central banks were easing. The past week was dominated by the US Federal Reserve meeting and resulting changes to forecasts. In the coming week, the US will continue to hold center stage with the release of a number of indicators on the housing sector and revised estimates on US GDP. Investors will also focus on the flash manufacturing PMIs released across the globe. Japan, the US, France, Germany and the Eurozone on Thursday. While a short trading week ahead of the Easter holiday, volume is expected to be light as markets move closer to the Good Friday holiday. Economic data scheduled for release include February durable goods and several manufacturing surveys. Investors will be looking for signs of improvement after regional manufacturing surveys for New York and Philadelphia this week came in above expectations. While regional Fed surveys on their own can be considered minor when taken as a whole, they give investors a good idea of whether we are off the bottom in terms of manufacturing. Overall, the global environment looks much more supportive of growth, with central banks communicating a dovish intent to investors. Key themes for the week will be the weaker dollar, which has fallen following the recent Fed meeting, along with ongoing and seemingly unstoppable rise in crude oil that has confounded many. Equity markets have remained firm despite the occasional dip. Fund flows have yet to turn bullish, which in one respect suggests a period of weakness ahead, but in another indicates there is still plenty of money on the sidelines that may enter and prompt further gains for global stock markets.